Welcome to the Deep Dive, where we cut through the noise and deliver the essential insights you need to stay, well, truly informed. Today, we're doing a deep dive into the latest earnings call that has the market absolutely buzzing.
That's right. We're talking about the second quarter 2025 financial results for Arista Networks, a name that's pretty much synonymous with high-performance networking.
Exactly. This call, held on August 5th, 2025, after market close, it provided a ton of information.
Yeah, it really did. And our mission today is basically to distill the core takeaways. We want to help you understand not just what happened, but maybe more importantly, why it matters for their strategy for the market.
And maybe even for how we think about AI infrastructure going forward.
Precisely.
So let's unpack this. We should probably start with the results, right? The numbers that lit up the board.
Absolutely. Arista Networks delivered a resounding performance for Q2 2025. They significantly beat expectations.
Okay, give us the headlines.
All right, so their non-GAAP EPS, that came in at $0.73, which was a pretty notable beat against the consensus estimate of 20.65 cents.
Okay, 73 cents versus $0.65.
Strong beat. What about revenue?
Top line, revenue hit $2.25 billion. Again, nicely surpassing the $2.11 billion consensus, and that represents 30.4% year-over-year growth.
Wow, over 30% growth year on year. That's really strong in this environment.
It really is. Quite remarkable.
Okay, digging a bit deeper then. Profitability, margins.
Yeah, so GAAP gross margin came in solid at 65.2%, and the non-GAAP operating margin was even more impressive, 48%.
48% operating margin. That's huge for hardware, isn't it?
It is. And this quarter also marked a historic first for them. They actually crossed the $1 billion threshold in operating income for the first time.
$1 billion in operating income in a quarter.
Okay. And cash flow.
Free cash flow, FCF, stood strong at $1.2 billion, so generating a lot of cash.
Right. And I assume the market liked what it heard.
Oh, definitely. The immediate response, you could see it. Investor conviction definitely seems strong, signaling, real belief in Arista's longer-term growth path.
Okay, so a clear beat and raise quarter on the numbers. But you mentioned strategy. What was the big strategic message here?
I think the key phrase came from CEO Jayshree Ullal. She stated Arista is well-positioned in data-driven AI networking. And that wasn't just talk. It backed up their decision to significantly raise the full year 2025 growth guidance.
Right, they raised guidance to what?
To 25% growth for the full year, targeting $8.75 billion in revenue now.
25% growth target for the year.
Okay.
And that's fueled by?
It's fueled by demand across, all their key areas, AI, cloud, and the enterprise sector too. But AI is clearly a major driver.
Let's drill into that AI piece then, because they put out a specific number for AI Ethernet revenue, didn't they?
They did, and it was a jaw-dropper. Approximately $750 million expected in 2025 just from AI Ethernet.
$750 million. Just for context, how does that compare to last year?
It's roughly a seven-fold jump from their 2024 AI Ethernet revenue.
A seven-fold increase. Okay, so what does that really mean? They're basically challenging InfiniBand head-on.
That's exactly it. This $750 million isn't just a revenue number, it's a declaration. They're positioning Ethernet, the standard networking tech, as a totally credible, maybe even preferable alternative to specialized interconnects like InfiniBand for these massive AI clusters.
Especially at the big hyperscalers like Meta and Microsoft.
Precisely. They're arguing Ethernet can handle the scale and performance needs, potentially more economically. It's about challenging that incumbency.
So how are they doing that technically? What's special about their offering?
Well, their strategy covers both scale-out front-end networks, for getting data in, and the scale-up or scale-out back-end networks. That back-end piece is critical for connecting the GPUs together efficiently within the AI clusters.
Right, making sure those expensive GPUs aren't sitting idle.
Exactly. It's about optimizing GPU utilization. Their Etherlink portfolio, they mentioned it, now has over 20 products aimed specifically at this. They're even anticipating aggregate AI networking revenue, so beyond just Ethernet, to exceed $1.5 billion in 2025.
And that's all incremental market share for them.
That's what they claim, yes. An entirely new market opportunity opening up.
Okay, AI is clearly huge, but they're not just an AI play. What about other strategic moves, like that VeloCloud acquisition?
Right, the acquisition of VeloCloud's SD-WAN assets from Broadcom. That's a really interesting move into the enterprise edge.
SD-WAN, software-defined wide area networking. How does that fit?
Well, it basically folds a Tier 1 enterprise edge franchise into Arista's portfolio. Before this, they were strong in the data center, strong in the cloud, but maybe less so at the campus edge or branch office.
So this gives them that full campus-to-cloud story.
Exactly. A comprehensive solution from the data center right out to the user.
And financially, does it move the needle this year?
Not materially for 2025 revenue, they said, but it's expected to be margin accretive by 2026, and they expect it to add low teens growth in service revenue going forward. So it's more of a strategic, long-term margin and portfolio play.
Makes sense. And they also brought in some new leadership to help drive that enterprise push.
They did. Todd Nightingale, who was previously CEO at Fastly, is joining as president and COO.
Ah, interesting hire.
Yeah, brings decades of technical leadership. And he specifically commented on the VeloCloud deal. He noted it fills that gap in the enterprise campus portfolio, but also significantly bolsters their managed service provider, or MSP, channel strategy.
So using MSPs to reach more enterprise customers.
That seems to be the plan. Leverage that channel to sell not just VeloCloud, but Arista's entire portfolio through it.
Got it. Okay, one more strategic point. Manufacturing. They mentioned Make in India. Why is that important?
Yeah, expanding their Make in India initiatives. It's smart for a couple reasons. One, it helps diversify manufacturing, which reduces risk related to tariffs. Two, it can lower logistics costs.
And that feeds into those impressive gross margins we talked about earlier.
Absolutely. It's part of that operational efficiency story. Helps keep costs down and resilience up.
Okay, let's talk context. Competition. NVIDIA's InfiniBand isn't going away quietly. Celestica is also mentioned sometimes. How does Arista see the competitive landscape?
Yeah, they acknowledge the competition. NVIDIA, Celestica, even white box solutions. But management seemed pretty confident. They maintain their innovation, their software differentiation, and what they call deep customer intimacy sets them apart.
Customer intimacy, meaning their relationships and support.
Essentially, yes. Understanding customer needs deeply. They did acknowledge the chatter was louder about competition this quarter, but they countered that their platform performance and feature set are stronger than ever. They also pushed back on the idea that they are always the most expensive. They framed it as a CapEx versus OpEx trade-off. Maybe the upfront hardware cost, the CapEx, is higher than a basic white box. But the OpEx, the operational cost of needing potentially hundreds more engineers to manage and integrate those white boxes, can make Arista's integrated solution cheaper in the long run.
Total cost of ownership, basically.
Exactly.
What about their blue box strategy? Is that related to the white box competition?
It is, yeah. They described it as a more hardened, sort of battle-tested version of white box hardware, but bundled with their EOS software. It's still evolving, they said, but it's meant to complement their main offerings. Maybe provide an option for customers specifically looking for that kind of architecture, but wanting Arista software and reliability.
Interesting. Okay, besides competition, what about market tailwinds? Are things generally looking good for network spending?
Definitely a major tailwind. They pointed to the huge expected increases in capital expenditures from hyperscalers. You know, Microsoft, Meta forecasts are 40%, even over 80% increases in their CapEx in 2025.
And a lot of that goes into data center infrastructure, including networking.
Precisely. That massive spending directly boosts demand for Arista's solutions, especially the AI networking side.
And back to those margins for a second, that near 49% operating margin. Do they talk about whether that's sustainable?
They did address it. They attributed it largely to the company's inherent efficiency, that do more with less culture. They believe their lean operating model is a competitive advantage that benefits customers through quality and support, justifying their value prop. They seemed confident they could maintain strong margins.
Okay, so looking ahead, what are the key dates or events we should watch for? Catalysts.
A few important ones coming up. First is their Investor Day on September 11th.
What should we expect there?
More detail on product roadmaps, and crucially, their financial model for 2026 through 2028. Remember, they're already targeting $10 billion in revenue by 2026, 2 years ahead of schedule. So Investor Day should shed light on how they plan to get there.
Okay, Investor Day, September 11th. What else?
Then in October, we should get more hyperscaler CapEx updates. That will be a key indicator of whether that demand environment remains as strong as projected.
Right, a check on that tailwind.
And then early November, we'll get Arista's Q3 results. That will be the first real data point on how they're executing against this newly raised, ambitious guidance.
Got it. Investor Day, hyperscaler CapEx, Q3 results, lots to watch. All right, that brings us to our favorite segment. This is not financial advice. Time to pitch an outrageous but plausible trade idea based on this deep dive.
Okay, here we go. Given Arista's really strong execution, particularly that AI Ethernet narrative, how about this? A long position in Arista Networks, ANET, paired with a targeted short position that's specifically against NVIDIA's InfiniBand networking components.
Ooh, okay. Long Arista, short NVIDIA's networking part. Let's break that down. What's the outrageous part?
The outrageous part is you're betting heavily on Ethernet, this ubiquitous open standard, to significantly displace NVIDIA's proprietary high-performance InfiniBand in its core stronghold, large-scale AI training clusters. For years, InfiniBand was seen as the only real option there. So betting against it based on Ethernet feels pretty bold, right?
It does, especially given NVIDIA's dominance in AI overall.
Exactly. But that $750 million AI Ethernet target from Arista for 2025, that potential $1.5 billion aggregate AI revenue, it suggests this isn't just theory, it's happening. Major players are adopting Ethernet for AI.
Okay, so that's the outrageous bet on Ethernet's rise. What makes it plausible?
The plausible angle rests on Arista's track record. They have consistently executed with high efficiency and high margins. They've successfully expanded from just data center switching to campus, now edge with VeloCloud, creating this full stack. And as AI deployments get bigger and companies look for more standardized, flexible, potentially lower TCO networking, Arista's high-performance Ethernet becomes a very compelling alternative.
So it's a bet on open standards, flexibility, and Arista's proven execution capability winning market share in the long run, even against a dominant player.
Pretty much. Add in their operational strengths like Make in India, helping margins. It paints a picture where they could realistically chip away at that specialized interconnect market while maintaining profitability. It's plausible they can capture significant share.
Okay, long Arista, short NVIDIA InfiniBand. Definitely not financial advice, but certainly food for thought based on this earnings call. Well, what a deep dive that was into Arista Networks Q2 2025. We've definitely seen a company that seems to be firing on all cylinders.
Yeah, from those impressive financial beats to the really aggressive strategic moves in AI networking and now the enterprise edge, it's quite a story.
That focus on AI Ethernet, grabbing VeloCloud, the operational execution, it really does paint a picture of strong momentum.
The narrative of Arista evolving, from that niche player to a much broader, diversified, AI-ready networking platform, all while keeping those best-in-class margins. It's definitely compelling.
Absolutely. And as always, just a reminder to everyone listening, this deep dive is purely for informational purposes. It is not financial advice.
Please do your own research, your own due diligence before making any kind of investment decision.
We hope this has given you a shortcut to getting informed on Arista and maybe spark some new questions for your own thinking.
Yeah, definitely curious to see how this plays out, especially on the AI front.
Thank you for joining us on the deep dive. Until next time, keep learning.
And stay curious.